What's up, guys? This is Casey, and welcome back to the channel. So today's January 13th, 2021. And I don't know about y'all, but we finally have some action in the markets. What do I mean by that? Well, if you were one of the people to buy back in March, if you were one of the toothsayers or one of the psychics to buy back then, you would have made a killing. But if you were like normal people such as myself here, the markets have been very, very flat for quite, well, shouldn't, excuse me, not flat. They've been very consistently going up here for about 2 years now. And we are finally getting some volatility in the markets, as I mentioned in my last video. Now, why is that important? Well, because today has been a continuation of that volatility. So as you guys can take a look here, the markets have been down today, which is great because this is going along the lines of what I believe to be is going to be an additional pullback. If you take a look here, it's down 1% today. The SPY was, but if you take a look in the more granular scheme of things, you will notice that also some of the major stocks were also significantly down today. Netflix was one of those. As a matter of fact, a lot of things were down today. It wasn't just Netflix. So let's kind of go over some of the stocks that were down majorly today. Shopify, ridiculous the way that it was down today. I mean, look at this. All right, so if you guys can take a look, let's back out here to the actually let's go to the monthly. I mean, talk about a pullback. This has been insane. I want to also talk. Let's take a look at another really popular stock that everyone loves to watch, Tesla. Well, guess what Tesla's been doing? It also has finally been pulling back. This is not Tesla. What is T? Is that AT&T? I don't even remember. I don't know. Here we go. There we go. One of those. Take a look at that. We got some pullback. Want to also take a look at DocuSign. And DocuSign has been hammered, right? So this has been one of the babies back in 2020 to where you would have made an absolute killing. If you would have been following this, you had a nice little pullback here. More months and months and months of consolidation. Oh, look at that nice pop up, and then boom, drop. Is this a buy right now? I think it is. Do I currently own any positions in DocuSign? I do not, but I do anticipate this being a nice bounce back and recovery. Now, what you guys will notice right now in the markets is that the growth stocks have been hit the hardest. Right now, Wall Street is selling all of the growth stocks. So if you guys can remember the beloved ARK ETF that everyone was raving about back in the day, meaning a couple of years ago, right? It had that huge run up from $50 to $137, and then now it's down to $80. So, right, so all of the growth stocks, the ARKs, even let's take a look at Twitter, right? So I do own Twitter in considerable amount, relatively speaking. It's down significantly. ARK's down, Twitter's down, DocuSign is down, Shopify is down. All of the growth stocks, but it's not even just growth. What we also have, let's say we have some of the market leaders, such as Nvidia. Nvidia's also has been getting pulled back. So what does this really mean for the markets? Well, if you take a look right overall in the SPY, you will see that the markets have just been ridiculously up, right? But what we have right now is we have the Federal Reserve that is eyeing, I'm just pulling up the site here, right, is eyeing the initial rate hikes that have not gone up since the word that starts with C and ends with 19. I'm not going to say it for the monetization things for YouTube, but that have not, that since that has broken out, the Federal Reserve has kept the interest rates very low. And why is that important? Because when the Federal Reserve does that, and when they start their monetary policy of purchasing, what they basically do is they pump in a lot of money to the economy, and they have pumped in a ridiculous amount of money to the economy. Now, fortunately / unfortunately, what has happened with this is that a lot of the money has really stayed with large institutions, the big investment firms, the big businesses. Apple, I think, was given like 50, man, I don't want to give the exact number. I want to say it was like 50 billion. It was something ridiculous that they got from the Federal Reserve so that they could keep a certain amount of employees and not lay them off as a result of the C that ends with 19, as a result of that impact. So a lot of companies have gotten ridiculous amounts of money free. And I think that is basically ending, right? So if you take a look here today, the Dow Jones has been down, the Nasdaq was down, the S&P is down. That happens, no big deal. They're not down majorly, but what has been getting down majorly, the total indexes are not down, but what But what is down is a lot of the growth stocks and a lot of the mid-sized stocks, they are starting to pull back. And with the Federal Reserve talking about having their first rate cut in March, January, February, March, so we have about another couple of months right before they meet. They are talking about raising the interest rates by a quarter of a percent potential. Yeah, so basically, yeah, so a quarter basis points. And the reason that's important is because that's going to make the companies, the businesses, the institutions who like to borrow money for leverage and for investment purposes and for business growth, it's going to make it more expensive. And businesses and corporations do not like higher interest rates because when they don't want to borrow money, then they don't hire. Then when they don't hire, people don't get jobs, and people don't get jobs, money gets tighter, and blah 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 blah. And so right now, I think that we're starting to have the beginning phases of a market pullback. Now, some of the things that I am looking for that I would love to purchase, right, are Apple. Apple hasn't had a significant pullback yet. It's getting there, right? So it's starting to finally show a little sideways consolidation, but we haven't yet seen the breakdown yet of that 167.99 range. I would love to see this stock get down to the 200 moving average. Will it go down? Will it not quite get there? I don't know. But, if it gets down to the 200 moving average range, which it hasn't really gotten down to for a very long time, right? If we go back to 2020, take a look, things have just been straight up. So literally from $53 to, 180. Look, it's been bananas. At some point in time, the markets have to pull back. The interest rates have been too low, and I think the roosters are going to come home to roost. Is that what they say? Right? One of the things that I also want to keep an eye on that people are talking a lot about is the housing market. So if you guys take a look here right now, if you guys are on the market for a house, or if you have been over the past couple of years, a year and a half, things have been really, really crazy. So I am in the state of Texas, and what you'll notice right now is that if you've tried to bid on a house, even a new house, typically speaking, when you want to purchase a new house, if the builder wants $300,000, you pay $300,000. Well, not anymore. A friend of mine who is a realtor and who actually sells new properties has said that they have been selling homes $30,000-$40,000 above asking price. Now you're asking, how could that be? Well, what's happening right now is you have hedge funds and large investment real estate companies nationwide that have been going in throughout major cities and medium-sized cities and growth cities, and they have been purchasing up brand new homes and brand new communities by the dozens. So a builder like, let's say, D.R. Horton or Giham or whoever, just pick one, will go through and they will build 50 homes, and the investment company will go through and they'll say, hey, I want to buy 40 of them. And this has been happening for the past year and a half. Now, why is this important? Well, typically speaking, investment firms, the real estate companies, they usually stay into the duplexes, the quadplexes, and the business rental, the business properties and things of that nature, or large apartment complexes. They've never actually delved down into the individual homes. And the reason this is important is because they are what I believe to be is I believe that they are attempting to monopolize the single family home market. So what I think they're trying to do is I think they're trying to figure out ways to allocate all of this additional surplus money that the Federal Reserve has been pumping into the economy over the past years as a result of the unexpected, foreseen pandemic, and they're trying to find ways where to put this money. And right now they're like, well, we got to go into the single family households, and that's what they're doing. And so it's making it very hard for families, to purchase single family homes. Now, I did find out that over the past few months, this has slowed down, so it is making it a lot more allowable for families to find homes, but it is still very, very challenging. And here I am in the state of Texas. They've just now recently, finally allowed investors to get back to purchasing properties, because for the longest, they pretty much said if we don't stop investors from purchasing, then families won't have homes to buy because they can't outbid businesses. So why is this important? Well, let's take this back to the market. All right, so we go back to the market. We go back to basically companies buying up all these single-family homes. We go back to the Federal Reserve that is looking at raising the interest rates. And we go back to the fact that we have had a historic, and I do mean historic, 2-year run. We have not had a recession since 2008, which ended in basically February, let's just say March to be safe, right? So it started somewhere in, the top was 2007 actually, and didn't actually find the bottom until 2009. We haven't had a true recession for basically 12 years now. And because of all of the Federal Reserve money and because of the an 8 9% interest rate, I do think that we are at a crossing point to where we are going to have a recession. Now, that is just my guess. That does not mean that we're going to have one. It just means that it has to. Because the Federal Reserve has understood that they have given companies so much cheap money for so long that they have to pull back the constraints on the pumping of the market of the money into the markets and on the interest rates so that things can slow down. Because if they don't, by a couple of years, a gallon of milk will be $12. We don't want that. And so we're going to have a contraction of the markets. Now, I think that what we're seeing here with this market starting to finally pull back, is we are seeing investment companies, investment firms, hedge firms, things of that nature. They are recognizing that, and they are starting to liquidate. Now, how far do they liquidate? I don't know, but I do know that if we do get a interest rate hike in March, as all of the economists are expecting, that we're basically are going to continue to go down further. And if you compare that with the fact that when you look at the SPY, we haven't had a significant pullback in the SPY since basically, the initial start of the pandemic. Well, that just got bought right back up, right? So during the time that regular Joe Smo, such as myself, or I should say individual investors, not institutions, were fearing and freaking out, thinking that the world was going to end, well, corporations and institutions were just buying up everything, right? Houses, stocks, equities, everything. And this has been going on since for the past 2 years. Well, at least it will be officially in April. And so I think that we are going to see an interest rate hike. I think we're going to see a stock market pullback. And I would be surprised if this is the start of the R word, which we call the recession. Now, I don't know if that's going to happen or not, but I do encourage my followers and people who are investing and even trading to trade very, very carefully right now. I do know that the old saying that, time in the market exceeds timing the market, but I think that unforeseen circumstances call for unforeseen times. So back then, if you guys had purchased, down here when literally, we were told this was a worldwide pandemic and, everything was just going to crap. If you guys are bold enough and to purchase down here, congratulations. But now, right now, if you look in the news, they're telling us that this is now a good time to buy and this is a good time for millennials to jump in and things of that nature. I particularly don't think so. So am I purchasing stocks that are going to be falling down? Yes. Did I buy some Twitter? Yes, I own Twitter. Did I buy ARK? Yes. Do I own DocuSign? No. But at this price point, I think I'm willing to own DocuSign. All right, so if you take a look, DocuSign has pulled back significantly from the $300 highs. It's pulled back all the way down to from the 298. It's now pulled all the way back down to 130. I mean, this is a buy. DocuSign is going nowhere. Now, will it go back up next month, next week, couple of months? I don't know. 6 months? I don't know. Next year? But I know one thing. This is a buy down here. DocuSign's not going bankrupt. It's not a stock. It's a speculative stock. It's a growth stock, but just barely. I mean, this is a company that every enterprise company that I know that I've ever worked with, and medium-sized companies and small companies, use to confirm and sign documents. This is the gold standard. They are not going anywhere. They are a growth stock, and this is why they're pulled back significantly. This is a significant buying opportunity. So while I don't own any, I will be purchasing some here in the next few weeks, maybe even tomorrow, I don't know. And I'm looking forward to owning the stock because I have full confidence in this. Let's take a look here. VU. VU is another. VU is an ETF that trades, basically trades along with the markets, with the SPY and whatnot, right? VU is pretty much, it's pretty much like the SPY, which is an ETF. Hasn't really moved much, right? Another one that hasn't really moved much is the coveted Google. So tech stocks in general have been pulling back, but they haven't pulled back anywhere near that I would expect for stocks that have gone up a ridiculous amount. So I would keep an eye on this. Make sure that you guys, you have some cash, you have some reserves set on the side. If you are invested right now in the markets, I would not freak out and pull all your money out. I do not recommend that. Because again, we don't know. This could come down, have a little, 5-10% move, and then go back up. Um, right now, we are on a 10% pullback, which is considered a correction. But I don't think that we are in. Technically, I don't know. Some people say 10%, some people say 20%. But we are in a pullback. I think that we're going to pull back. We're going to consolidate sideways, and we're going to fall more. And then people are going to freak out. Then we're going to show they're going to fall a little bit more. It's going to turn around and reverse up. But who knows? So let's keep on the Fed. Let's keep on the price action of the stocks. If these grade A stocks continue to fall down, then I say we need to continue to buy. If Google does come back down here and retest this 200 moving average, which is very possible, I do think it's going to break it. We're going to keep an eye on that, right? And then let's try to, figure out what those next support levels are. So I will be making some additional videos to discuss some of the stocks that I'll be keeping my eye on, some key support levels, and I will also be reviewing additional things that are going on in the stock markets that can keep you guys informed. If you have any questions, please make sure you guys like and subscribe to the channel if you haven't already. Make sure you guys leave your comments in sections below and let me know what you guys would like me to talk about when it comes to the stock market, and also just any questions that you have when it comes to investing. I will also be making a video, as I talked about previously, about Webull and the new updates and new features, because I have gotten some questions and feedback with you guys wanting to know exactly some of the new features and the functionality and how to operate it. So be on the lookout for that. Hit the notifications, hit the subscribe button, leave a comment, and thanks for tuning in, and I will talk to you later. Take care.